As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Reluctant Preppers provides educational awareness and commentary only. Opinions expressed do not constitute personalized financial advice. Viewers are encouraged to do their own research and seek qualified personal financial consultation before making investment decisions.
Welcome back, Reluctant Preppers. It's been a while since we've had this guest on. Jeff Clark is the Senior Precious Metals Analyst at goldsilver.com. Today is Monday, September 30th, 2019. Jeff, thanks for joining us again here on Reluctant Preppers.
Dunnigan, it's great to be back with you again.
We've been wanting to get you back on for some time, and then I nagged you especially because I saw an article you just wrote last week called "These Gold Investors Got Your Back, Jack." And you're talking in there about some pretty impressive stats and dynamics that are going on with some major gold buyers, and why that should matter to people who maybe have been hesitating and wanting to make sure that this is an okay time for them to consider either dipping their toe into acquiring precious metals or maybe adding to an accumulation that they've already started earlier, and why it's helpful to be aware what sort of some big fish are doing when you're a small player in this. So if you'd be willing to sort of walk us through the main points and the main arguments that you laid out in your article, and I'll add a link to your article in the description of the video for those who want to read it in its entirety.
Sure. Basically, it has to do with the central bank gold agreement, and there were some other gold websites that did talk about this a little bit, but mostly this went largely unreported, especially in the mainstream press. The central bank gold agreement was this agreement that mostly European central banks, there was 21 of them, that they came up with back in the late 90s. And the reason they came up with this agreement was to coordinate their gold sales out of their central bank reserves. And the reason they wanted to do that is because they were all selling. They had been selling for like 2 decades, and of course, these are very large holders of gold, and so when they sell, guess what happens to the price when you dump a lot of metal onto the market? And so it was devaluing the gold that they otherwise still had in their reserves, and they wanted to stop doing that. So they came up with this agreement that, okay, we're all going to limit our sales, in total and each individual bank. And they signed this agreement in 1999, and it was to be renewed every 5 years. So they renewed it in 2004, they renewed it in 2009, they renewed it in 2014. Well, 2019 came up, and it was supposed to be renewed in September 26th of this year, just a few days ago. Well, they jointly decided not to renew the agreement, and that's significant because it means they are no longer selling gold into the open market in mass. There are some sales that go on, but on a net basis, they are overwhelmingly buyers. But they made it official, saying, look, we're not even going to renew this agreement because there's no need to renew it because we're not selling any gold and we have no plans to sell any more gold. And there's a great chart in that article people could pull up and look at that, the amount of sales that were made each 5-year segment. And then this last 5-year segment, sales were barely visible on a chart at all. So it's significant because, again, they hold a lot of gold. They do have some influence in the market, so their buying and selling does matter. And what this means, essentially, is that they are now buyers and on a net basis, and they are not sellers. They've been doing this, of course, a lot of people in the gold community know this. They've been doing this for 10 years now, going on 11, 12 years where they've been net buyers. But now it's official. And what it basically means that as a group, the era of central bank as gold sellers is officially over. And it's the age of central banks as gold buyers now. And, of course, that means that because of the volume that they transact in, this is going to support the gold price going forward.
One thing I noticed about that chart that you were describing, and we'll make sure and people can look at that as we say this video, but the peak in recent history of gold prices was like in 2011, and at that time it shows that their selling had dried up to the point where they were down to like 90% less volume of selling than they had been in peak years, back in 2005 approximately. So it's really remarkable that it isn't like they waited until a price came and then tapered off their selling. It's like they were tapering their selling all throughout, the second half of the first decade of the 2000s. It's really noteworthy, and then just almost completely dried up for the last decade now.
Yes, that's right. And you'll see in that chart that they were huge sellers, and then all of a sudden 2009 hit. And what happened? Sales drop in less than half. And there's a secret message in there, right? Because that's when the financial crisis started. And in a financial crisis or any kind of economic or monetary crisis at all, gold is going to do well. You want to have gold. You want to make sure you own it or are buying it. And so if you think another crisis is coming, they're going to do the same thing again. So it just shows you from history that when there is any type of crisis at all, gold is going to do its job, and people are going to turn to it. Demand is going to rise. The price is going to rise. And that's just yet another example of that.
In the article, you also gave a direct quote from the signatory banks' agreement, or their most recent statement, that was telling about their forward plans about selling.
Yes, that quote is, none of the signatory banks currently have plans to sell any significant amount of gold. That was one of the quotes in the actual press release from the ECB, the European Central Bank, which kind of oversaw all these 21 banks in total. But they made it official that, look, we're not selling. We don't have any plans to sell. We are buying. And so there's and so there's no reason for us to continue to have this agreement. And there's another great chart in there. You can see that total world gold reserves have been rising since 2007. They bottomed in 2007, and every year they've been rising. And by the way, just this year, 2019, the amount of gold purchased by central banks for their reserves for the first half of 2019 is the most in 10 years. And we're on pace where they're accumulating or buying at the fastest pace since 2015. So 2019 is probably going to set a record for central bank gold buying for their reserves.
Now, this is you're referring to the European central banks in this most recent statement. I see that the chart there is world gold reserves. Can you help make the distinction for us?
Yeah. I don't mean to mix things up, but the ECB is referring to the signatory banks of the central bank gold agreement. But of course, there are other central banks in the world besides those in Europe, and that chart is showing world gold reserves. So it's saying, as a group, the signatory banks and every other central bank as a group have been net buyers since 2007. So it's quite remarkable. And also, by the way, I put in that chart, I realized that the all-time high in central banks holdings was back in 1965 at over 38,000 tons, and they have a lot less than that now. So global holdings would have to climb another 13.5% just to match what they had back then. And some people might say, well, we were kind of on a semi-gold standard then and all that. Well, that's true, but consider that there's a lot more gold around now. There's a lot more money around now. There's a lot more citizens and buyers and investors around now. And we have a lack of a crisis right now compared to what we had in World War II. That's why those holdings were so high back then. It was a fallout of World War II. So, the idea that they're never going to return to that level, I would say, yeah, they may not. They may go higher because we're in a lack of a crisis right now, and yet they're continuing to climb, and there's a lot more money in the world right now that could come chasing after gold. So I do expect, this is a trend in motion, and trends in motion tend to continue. And so the title of the article is correct. These investors got your back because they are buyers. They're supporting the market. And while the price of gold, fluctuates daily and trades just like any other asset, demand is built in just from these entities of
Right.
central banks.
Now, you mentioned also, besides this central bank agreement, you also mentioned rule changes that happened just this year about the categorization or the classification of gold as a bank holding.
Yes, that's been talked about by some in the gold community as well, but it kind of dovetails nicely with the end of the CBGA agreement, and that is the changes that the Bank of International Settlements made to how they view gold. In the Basel III rules that went into effect March of this year, gold had been a Tier 3 asset, which meant you could only count half of its value, 50% of its value. They officially changed that to a Tier 1 asset, which means it has zero risk, and you count 100% of its value on your books. So they, clearly see gold as a critical asset and as a stable asset and as something that is worthy of changing and putting it into their very top tier of how they view assets. So you put that together with the fact that they ended this gold agreement and that central banks are net buyers, and you can see that community officially recognizes gold in the way you and I have recognized gold for many years, but that they continue to see it as a critical asset and will continue to buy.
Yeah, I had to chime in because your statement was so telling when you said that they've officially admitted it or recognized it, because the old saying is follow the money or do as I. How does it go? watch what they
right.
do, not what they say.
Do as I do, not as I say.
But even
right.
Ben Bernanke in front of being interrogated by Congressman Ron Paul at the time, saying that a gold or silver coin being held up was not money, but was just a barbaric relic or whatever. And yet here, the bankers of the world basically showing their true colors, and the true color is gold.
That's right. That's exactly right. Follow the money. Follow what they do, not what they say. And what they're doing is not just officially recognizing gold as a top-tier asset, but actually treating it as such in their own reserves. They're adding to reserves. And that includes China and Russia, of course, and even Turkey. I think their reserves year over year, their gold holdings in their reserves are up something like 48%. I mean, it's an incredible jump in their reserves. So, if you follow what they're doing, if you follow the money, then you want to be buying gold too.
That's what I was going to ask you next, because you mentioned all of making that leap from the European central banks, who are signatories of that agreement, versus the world gold reserves. And I thought, we've had a lot of guests on talking about underreported gold reserves coming from some countries that basically don't really want everybody to know their private status. Some people mention China, some people mention Switzerland, some others. But you also addressed some of those other countries that are not part of the European Central Bank in your article as well.
Right. Well, that would include China, Russia, Turkey. None of those were in the CBGA. And they have been aggressively buying for some time now, especially since 2009, so for at least a decade now. And again, those are central banks adding to official gold reserves they're not part of the CBGA. Again, most of those banks are in the European Union. These are ones that are outside of it. But the point to all of it is that in the big picture, global central banks are officially adding to gold reserves aggressively. I mean, there's no other way to really put it. They are continuing to buy gold, and it makes you wonder, right? Then again, like what do they see that maybe we don't? Why are they so aggressively buying gold? Well, each country may have their own individual reasons, but obviously, when you see a large entity like central banks continuing to add to gold reserves, there's a message there. They see something. They see a need to be adding to their reserve. They see a need to be buying more and more gold. And I think that's a message we should all heed, that we should all be adding to gold because, as the movie line says, something wicked this way comes. I think, at some point...
Yeah, I was going to mention that too, is that we've talked with several guests who are very knowledgeable about the bank derivative complex and so on, and of our global financial system, and they're saying that in the near total collapse of the credit system and the global banking system in 2008, 2009, that was averted by injections of liquidity and capital and so on, and bailouts and all that, that the systemic underlying problems, the actual ill health, was not addressed, was not corrected, and in fact, the medicine has made the disease many times over more virulent now, and that the deaths are so much more, and the derivative exposure is so much greater, and all of those dynamics that placed the world at risk then are only greater. There's not a single one of those that's more stable or lower risk now than was then, but usually in many dimensions much greater. So. And it is telling that your chart, for example, the Russia and Chinese gold reserve chart, this shows the step function basically in 2009, just leaping upward and almost doubling China's stated gold reserves then, and again in 2015 and so on. So where does that leave people who, like us, are being told, nothing to see here, folks, move along, just keep investing in the stock market, but meanwhile the banks are squirreling away as much gold as they can get their hands on? What alternatives do people have who don't trust the official line on that?
Yeah, that's the thing. You're exactly right. Don't do what they say, do what they do. And usually when you hear some of these politicians or central bankers themselves saying, trying to reassure markets, well, they have a motive for doing so. They have a direct interest in making sure things stay calm, even though they themselves may be doing something differently. So you have to look beyond what their vested interest is and what they say, and look at what they do. This is no different than Bernanke saying the real estate market is absolutely fine and is stable in 2007. So, this is the same thing. These are politicians that are saying everything is fine and trying to reassure us when they themselves are, doubling down on gold. So they clearly see something that's ahead that, they see a reason to be doing so.
This is a fascinating article, Jeff. You've got a lot of these articles that you have been producing. If people want to read more of your articles, where can they find them?
It's real easy. It's just goldsilver.com, and you'll see our blog there and our news page. Everything is right there. And I would encourage people who haven't just to sign up for our newsletter. We don't bombard people or, sell names or anything like that. But you do get our research and our education before the public, before it's released to the public. So it's a great way to really stay in touch. And of course, Mike has his videos every once in a while, and he's very good at that. He's one of the best in the industry at producing these videos, so he's very worth listening to. We try to keep those short for people too. So that's a good
he's
place
been
to...
producing that series for some time on the secrets of money.
Yes, the Hidden Secrets of Money, and there's I think 9 or 10 episodes now. There's a whole batch of them on our site. And he's slowed up on those because he and I are writing a book right now. In fact, we've got the first draft almost done, so we're hoping to sneak the book out into the market by the end of the year. So we'll see how that goes, but it's going to be very exciting. It's all about gold and silver and what we think is coming and why we think you need to own it and where we think it's going. I think people will be very pleased with what they read in that book.
It's interesting, the concluding paragraph of your article echoes something in almost the similar words that another one of our recurring guests, Gregory Mannarino, known as the Robin Hood of Wall Street, also uses about becoming your own central bank. So that seems to circle back to that principle of do what the bankers are doing, because they certainly take care of themselves. We've certainly seen that. And in fact, they expect us to take care of them too through bailouts. But rather than only taking care of the bankers, maybe you can take care of your family first.
That's right, and the point is, gold can do that, and silver as well, but especially gold. And so you do want to have your own central bank have lots of gold in it as well, relative to your net worth and your income, because it's going to become very useful, we believe, in the near term. So, in the very near future. So, I do encourage, and today is a good day. You see gold down today. A lot of that has to do with positive news on the trade developments. But the trade war is not the sole catalyst here it's not the reason to own gold. And that could settle, but we still have all these other issues that you mentioned earlier, and all your other guests have mentioned, that have yet to play out. And when those begin to play out, that's when we're really going to see some big fireworks, and you'll be very thankful that you own gold at that time.
Yeah, one of those big things, again, I'll quote Gregory Mannarino. He says, the trouble will start in the bond market. Watch the bond market. Don't watch the stock market, because that's a follower, not a leader. And certainly for the last 10 days approximately, we are being told that the Federal Reserve has been injecting up to $75 billion every night into some as yet unidentified recipient who desperately needs it in the banking system, because this is an emergency measure. And they say desperate times call for desperate measures, but we're not being explained to why this is such a desperate time that $75 billion, calculate what that is to every man, woman, and child in the United States. That's a lot of money that's going out every day. And we interviewed Alistair MacLeod, who just came out with an article over this last weekend explaining why he believes the trail of clues leads to a bailout of Deutsche Bank, which is obviously one of the most powerful banks in Europe and in Germany, which is the powerhouse of the Eurozone. And so it's a big time, and you mentioned we're not in a time of crisis, but we could be pretty soon.
Oh, yeah.
Based on what...
Yeah, absolutely. It could happen overnight, and one of those black swans is going to blow up on us. It's really just a matter of time. And when that happens, and what does that tell you? That they have to put that much money into the system? That tells you that things are not healthy and things are not as good as they tell us. If you understand that message and you understand the role gold can have in a portfolio, you want to buy. You want to make sure you have a meaningful exposure to gold and silver for what likely lies ahead, whatever it may be. And that's the nice thing about gold. It doesn't matter if it's about the stock market or the bond market or credit or geopolitics or our actual currency or the economy. It doesn't matter. Gold has protected us for literally thousands of years, and it'll do it again.
Well, for those of you who are interested in finding out more about the gold options that are available at goldsilver.com, it's a vendor that we have used, and in fact we're a member of the Insiders Club there from having purchased enough, so appreciate getting some extra publications from Mike along the way as well. We've been speaking with Jeff Clark, Senior Precious Metals Analyst at goldsilver.com. Jeff, thanks as always for joining us here on Reluctant Preppers, for giving us a personal walkthrough of your article and breaking it open for us so we can understand all the principles involved. And again, folks, there'll be a link to Jeff's article in the description of this video. Jeff, thanks for joining us again here on Reluctant Preppers.
Thank you, Dunnigan. We'll talk to you again shortly.
Hey Reluctant Preppers, if you've been putting off buying gold and silver or want to add to your collection, you can support Dunnigan and Reluctant Preppers by going to the link that's in the description of this video to purchase your gold and silver from goldsilver.com. Through that special link, you'll be helping us out, and we've used them, they deliver. Thanks for supporting Reluctant Preppers. Hey Reluctant Preppers, if you want to hear more of bonus footage from other guests we've had on, come on over right now to patreon.com/reluctantpreppers and access that bonus footage there. Take care.